The Fed cut rates again this week and signaled that they will cut just one more time in 2026. What are the chances that the Fed might end up not cutting again, or even have to hike rates next year? How likely is a significant fiscal priming ahead of the midterm elections next year? What is its only path? And what does it mean for your money? December is when Wall Street pretends to see the future and investors pretend to believe it. Pretend or not, where do I stand on the 2026 outlook? For whatever it's worth, my outlook for next year is predicated on three predictions. One, I still believe the AI bubble will burst next year. I went through my reasoning in detail last week, so I won't rehash it here. The bottom line is that I think intensifying competition will force the market to reassess the expected returns on the ongoing AI-related CapEx spending. This prediction is the rationale behind my 530 steepener position in my short NASDAQ versus long Nifty 50 position. Two, I believe the war in Ukraine will finally end in 2025. Check out this video from 2 weeks ago if you're interested in my arguments. But I believe it will be difficult for Ukraine to sustain its war effort with rapidly shrinking U.S. military and financial support. The draft budget for the Pentagon for fiscal year 2026 and 27, released earlier this week, provides only $400 million for the Ukraine Security Assistance Initiative, a fraction of what Ukraine needs to keep fighting. My prediction that Ukraine has no choice but to accept Trump's peace plan is why I've established a short position in the December 26 Brent futures. A deal will see the lifting of sanctions on Russian oil fairly quickly, I think. Three, I think we might see a further easing, possibly substantial easing of U.S. fiscal policy in 2026. If this prediction proves to be correct, it will have major economic and financial market implications. I will discuss the assumptions behind this prediction below. Markets were dominated by Trump's policies in 2025. It is reasonable to assume that Trump will continue to cast a long shadow in 2026. To me, the million-dollar question is what Trump will do to help his party retain its congressional majorities in the upcoming midterm elections. As I argued in a previous video, even though Trump's name is not on the ballot, he has a lot invested in this midterm. So much so that Trump's chief of staff said this week that he will campaign next year like it's 2024. But campaigning will not be enough to carry the Republicans. Odds are almost always stacked against the president's party in midterm elections. Indeed, the president's party has lost seats in the House in 20 out of the last 22 midterm elections. Trump needs to pull out a big gun if the Republicans were to prevent a blue wave. And he will have to do it very soon. This is because if his approval rating keeps falling, he could soon become a liability than an asset for his party. Trump needs a big boost to his approval rating right now. And what would it take? In my view, the only thing that could save the Republicans from a blue wave in 2026 is Trump's idea of a tariff rebate. The rebate is more than just pre-midterm fiscal stimulus. It can fundamentally reshape the political economy of protectionism by turning households into beneficiaries of tariffs rather than victims. In doing so, it could flip the inflation narrative, blunt Democratic criticism, and make Trump the sole channel through which households feel relief. Politically, the idea is a slam dunk. The problem is that Trump cannot do it without Congress, and the idea is already running into opposition from fiscal conservatives. Several Republican senators said over the past 2 weeks that the tariff revenue should be used to pay down debt instead of towards a rebate. In the House, Speaker Mike Johnson, who shepherded Trump's big beautiful bill through Congress, is facing open rebellion from his own caucus. And Trump certainly cannot count on the support of the Democrats, who won't want to give him a political win before the midterms. So how is Trump going to push through the tariff rebate? Trump made news on November 25th when he suggested that it may be necessary to extend the Obamacare premium subsidies that are set to expire at the end of the year. This was a bit rich, even for Trump, given his refusal to extend the subsidies was why the U.S. had just gone through the longest shutdown in U.S. history. But maybe there's more here than meets the eye. In my view, extending the Obamacare subsidies may be the only viable path to making Trump's tariff rebate a reality. Maybe Trump sees it the same way. Imagine a new reconciliation bill that extends the Obamacare subsidies by 2 years and sends a $2,000 check to every working American household earning less than $75,000 a year. Extending the Obamacare subsidies is Democrats' #1 policy priority right now. If this is on the table, many Democrats would negotiate, especially Senate Democrats facing tight races. The fiscal hawks among Republicans will likely oppose the bill, but my guess is that the centrists will fall behind Trump very quickly. Many Republicans want to avoid health insurance premium hikes before the midterm. The tariff rebates will also help answer the affordability question that is likely to dominate the debate before the midterm. To placate the fiscal hawks, Trump could offer to close certain corporate tax loopholes and cap discretionary spending growth. I can even see Trump offering to use the tariff revenue to fund part of the extension of the Obamacare subsidies. I don't underestimate the challenge of getting such a bill through both houses quickly, but I would give a 60% chance to it getting done before the midterm. A major risk to my prediction is if the Democrats somehow manage to enlist enough Republicans to extend the Obamacare subsidies before they expire in less than 3 weeks. However, my gut says that Trump will do everything to kill such a move. Mike Johnson told reporters on Wednesday that GOP leaders will bring a vote next week on a healthcare bill that does not include an extension of the subsidies. Trump knows that failure by Congress to extend the subsidies before the deadline will create an opportunity for him to offer his big, beautiful bill #2 as the only way out. The Fed cut this week, but signaled a pause. The question is whether this cut was the last cut for a while, or there's more to come. Powell said at the press conference that the Fed's key rate was now close to a level that neither restricts nor stimulates the economy. He also said inflation could move higher early next year as more companies pass on the tariff costs to consumers as they reset prices to start the year. Finally, the Fed revised up its 2026 GDP growth forecast to 2.3% from just 1.8% back in September. All else being equal, a tariff rebate in the order of $200 billion would push GDP growth easily over 3% if it gets done quickly. All else being equal, it will also push inflation higher. All else being equal, a significant easing of U.S. fiscal policy next year will warrant higher and not lower rates. I stress all else being equal only because my view that the AI bubble will burst next year. I see a bursting of the AI bubble being the biggest downside risk to rates and the dollar, and the tariff rebate as the biggest upside risk to rates and to the dollar. A tariff rebate would be bullish for consumer stocks, while a bursting of the AI bubble will be bearish for tech stocks. I think consumer staples may very well outperform tech next year, but timing, of course, will be crucial. But my guess is that Trump cannot afford to wait too long before he goes all out on his rebate idea. Time is not on his side for once. Thank you for listening.